Welcome back to the Digital Asset Report. Crypto markets are starting the week under pressure, but institutional flows are showing signs of life. Bitcoin opened Monday near $63,000, while Ethereum is just under $1,900. Despite the weak prices, U.S. spot Bitcoin ETFs just posted their strongest week since April, taking in roughly $854 million through August 7th. BlackRock's IBIT captured about $693 million of that total, and Ethereum's ETF added another $245 million. While these aren't exactly historical bull market numbers, it's a sign that optimism may be returning to the ETFs. President Trump gave comments this week on Bitcoin to Punchbowl News, saying adoption is happening organically among everyday consumers and reiterating that America must beat China on crypto. He argued that Bitcoin use is already taking pressure off the dollar. Take a listen.
We don't want to see China take over crypto. I don't want to see China win with AI and crypto. Crypto is a big deal. I mean, I see it more and more where people are paying with Bitcoin, and they don't even know about cash anymore. That takes a lot of pressure off our dollar. It's a good thing for our country.
The biggest story this week is in Washington. The Clarity Act failed to get a floor vote before the Senate left for August recess last week, despite Thune's earlier commitment to hold one. Senate Majority Leader John Thune moved on Saturday instead to set up a procedural vote on the bill when lawmakers returned from recess in September, filing cloture on the motion to proceed. The legislation would create the first broad federal market structure framework for digital assets, including clearer rules for when tokens are securities or commodities and which regulator has jurisdiction. Republicans still need Democratic support to reach the 60-vote threshold, with the cloture vote scheduled for September 15th. Negotiations continue around government ethics and stablecoin rewards, with banks pushing for tighter restrictions because they see stablecoins competing directly for deposits. Stablecoin legislation has already moved into implementation. Market structure remains the major unfinished piece. Meanwhile, TradFi is continuing its dive into tokenization. Britain's Financial Conduct Authority is developing a framework for tokenized gold and has been speaking with major banks about using digital gold as collateral in wholesale markets. London handles roughly 70% of global bullion trading, so bringing tokenized gold into that market could turn blockchain-based collateral into part of mainstream finance. And speaking of gold, Treasury Secretary Scott Bessent recently had comments about gold in the context of global macroeconomic trends. Take a listen, but notice his Bitcoin remark.
Why is gold moving around the world in such huge quantities right now?
Well, a couple of things. Physically, it's moving because of potential tariffs here. It was unclear whether we were going to exempt gold from tariffs, which I believe we have. So there was a big move out of vaults in Switzerland, out of vaults in London to get it into New York. And look, that there are a lot of different stores of value over time. Bitcoin's becoming a store of value. Gold has historically been a store of value. I think what's interesting is, where do we see the gold demand coming from? A huge amount is from China.
Even as Bitcoin becomes a store of value, the corporate Bitcoin Treasury trade is changing fast. Strategy sold another 1,690 Bitcoin last week for roughly $109 million, its second consecutive week of Bitcoin sales. The company also raised about $653 million through common stock and increased its dollar reserve to $4.65 billion as it manages preferred securities and its broader cash position. And Strategy is not alone. Mara's new quarterly filing revealed that the Bitcoin miner sold approximately 23,000 Bitcoin during the first half of 2026 for $1.6 billion at an average price of $70,631 per Bitcoin. Mara says the sales helped fund operations, growth opportunities, and liquidity. It still held 35,577 Bitcoin at the end of June. The takeaway is that large corporate holders are increasingly treating Bitcoin as an active balance sheet, not simply something they'll accumulate and never touch. In other news, Russia's ruble-backed A7-A5 stablecoin has now processed nearly $140 billion in turnover since launch. The platform says it serves roughly 15,000 regular business clients and can process as many as 2,000 payments per day, primarily supporting international trade with Asia. Western governments have sanctioned entities connected to the project, but the scale shows how quickly stablecoins can become settlement tools outside of traditional banking. That risk is drawing enforcement. The U.S. Treasury sanctioned questioned Dubai-based crypto exchange Shellbit on Friday, alleging it facilitated millions of dollars in transactions connected to Iran's Revolutionary Guard and other sanctioned entities. The bigger picture this week is the continued integration of digital assets into the financial system. ETF capital is returning, lawmakers are trying to finalize market structure, banks and asset managers are tokenizing traditional assets, and corporate Bitcoin holders are becoming more active with their reserves. Prices remain weak, but institutional usage continues to expand. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more.